Good morning, everyone, and welcome to the European crossover webinar. We're getting the German IFO data coming in momentarily, expecting 95.5 on the climate. 96.3 here is the actual business climate, waiting for current conditions and expectations, but 96.3 on the business climate. We're expecting 95.5. Current new conditions, 98.8, just a little bit of rise above 98.1. Let's see here, and new expectations, we're looking for 93. All in all, just a little bit more favorable, a number 93.8. Same thing here on expectations. Probably not a bad thing considering how weak German data has been for quite a while. We did have also producer prices, which came in flat overall, but there we have it with the IFO. We'll see as far as changes here. The euro just a tad bit weaker. And we do have UK core CPI. CPI figures due at the bottom of the hour, as well as PPI. Then at the top of this next hour, we do have Eurozone HICP final data. And coming into the States and US trading hours, we're going to have Canadian CPI inflation figures at 8:30 Eastern. And that will be it. No US data here other than some, the MBA purchasing index, which is a very, very low tier number. It's been very, very quiet trading. Just not seeing very much movement. Look at the euro just scantily down. I'm just, like I said, look at this. You would think this is maybe a 10-minute chart or something. It's a 2-hour chart, and we're just not moving very much. In the last 4 hours or 3 hours, we've moved all of 13 pips, maybe 13 pips. Look at the dollar index, same thing, very, very quiet. Peso still at these lows, but has found some support. We were looking at 18.92 yesterday. Canadian dollar CAD, that is. Same here, very tight range. Cable, after all the fireworks, this market's gone dead quiet. Look at that. We're just barely even moving now. And dollar yen was able to close below 954, but no real follow through. Kiwi just a tad bit weaker following that gravestone doji that we saw on Friday. So just a bit weaker from yesterday's close, not a whole lot lower. Aussie dollar awaiting jobs data, which will come into this next session. Look at the cross race. Sterling odd after posting that gravestone doji here on Monday. We're barely even moving in these sterling pairs right now. Look how quiet that is after some pretty good movement, even leading up before then, well before then. We're just stuck in the mud here and basically just not even trading, essentially. Same thing here with Euro Kiwi. Aussie yen, very, very quiet. Even the guppy, a little bit lower though, but still relatively quiet trading. And Euro odd here, same here. Looking here in equity trading, here in the indices, S&Ps, I mean, this is just dead. I mean, absolutely nothing short of just plain old dead. right here. We're just, it's graveyard trading. Looking here at the 10-year, same thing here. I like to trade the bonds, but like I said, the liquidity is in the 10-year, and most people trade the 10-year, so I wanted to go and start to focus a little bit more on the 10-year. But you can see here, relatively quiet, tight trading, range trading. Same thing here, even with the wild and woolly Nas here, that's even trading very quiet. Gold, a little bit of a bid, but here we are at 1482.80 in the Feb. Not a whole lot of movement. And crude oil, we have backed off a bit from the $61 range. We came up here, so currently at 60.39 in the Feb crude. On the daily. Let's go on and switch back into FX. So Australian dollar awaits jobs data and Kiwi at a one-week low as dairy prices fall. The Australian dollar marked time on Wednesday ahead of monthly employment data later this week, while its New Zealand cousin suffered from a steep drop in the price of dairy, the country's top export. Trading in major currencies was generally slow as investors head into the holiday season, awaiting further details on the Sino-U.S. trade deal. Oh my God. The Australian dollar was 0.09 tenths lower, 68.44, and on track for a second consecutive session of losses on expectations the central bank would cut interest rates again next year. The Reserve Bank of Australia has lowered its benchmark rate 3 times this year to a record low 0.75%. Financial futures are predicting a 50-50 chance of a cut in February, while a full 25 basis point easing is fully priced in by May. Focus now turns to November employment data due out on Thursday, where disappointment could bring forward the timing of another RBA rate cut. Data out on Wednesday showed an index of internet job vacancies decreased 1.3% in trend terms in November to record its biggest fall in 7 months. It was the 11th consecutive monthly fall. The index is now 10.6% lower than a year ago, the biggest annual decline in 6 years. The job vacancies data released today is the entree before tomorrow's main meal. The November labor market report is served, said Ryan Felsman. Leading indicators of job growth point to a continuing softening of labor market conditions, testing the Reserve Bank's policies resolve. RBA Governor Philip Lowe said that the national jobless rate must fall to or below 4.5% from the current 5.3 for it to generate any wage inflation pressures. Across the Tasman Sea, the New Zealand dollar slipped 0.2 to a one-week trough of 65.59. International milk prices fell at a fortnightly global dairy auction held in the wee hours of the morning, with the GDT price index skidding 5.1%. The auction results affect the Kiwi as the dairy sector generates more than 7% of the nation's gross domestic product. Like I said, it's been a relatively quiet session overall. Emerging market Asia, FX most slip as dollar gains on fresh Brexit woes and the Taiwan dollar rises. Most emerging market Asian currencies weakened on Wednesday as the dollar gained on renewed fears of a chaotic exit of Britain from the European Union, while trading in the region was subdued ahead of the holiday season. Britain on Tuesday set a hard deadline in December 2020 to reach a new trade deal with the EU, trying to pressure Brussels to move quickly to seal an accord. The plunge in the pound supported the dollar to its highest in a week against a basket of currencies. There's no real motivation to be taken on a strong directional views, especially with the fact that major risk events are out of the way, so the scope for volatility is reduced, said Wei-Ling Chang. There is some softness in activity since we are heading towards the Christmas season, which why we aren't seeing any drastic moves except for the case of sterling. Taiwan dollar led gains in the region, strengthening 0.2 to the dollar for a fifth straight day. Currency has regained footing this year in the back of improving exports and growth expectations and a pickup in equity flows. And lastly, reality bites as the Brexit fears return. The pound extended its slide on Wednesday as Britain's fixing of a fresh Brexit deadline rekindled fears of a chaotic exit from the European Union, while the dollar won back and lost ground. Sterling has collapsed more than 3% since it peaked at an 18-month high of 35.16 after Prime Minister Boris Johnson landslide electoral victory last week. His government, which campaigned to get Brexit done on Tuesday, set the end of 2020 as an immovable deadline. With the level of frothiness and positioning, I think people had priced in very smooth sailing throughout 2020, said Chris Weston, head of Melbourne brokerage Pepperstone. This has given us a snapback to reality. If you thought Brexit was solved and we're going to see very, very smooth times ahead, then that's not quite going to be the case. Sterling was last traded at 31.02 before below while we had sat polling day at 0.2 lower for the session. Asked if the government would legislate to rule out the extension of a transition beyond 2020, one of Johnson's most senior ministers, Michael Gove, said exactly, absolutely. Inside Brussels officials said the timetable was rigid and likely to limit the scope of any deal. Against the euro, the pound hit a two-week low of 85.17 pence. Currency approaches another hurdle. Focus will be also on the German business data due out later on Wednesday, which we did go over, along with a speech from ECB President Christine Lagarde, remarks from U.S. Federal Reserve Chicago President Charles Evans. Sterling's slide supported the dollar to its highest in a week against the basket of currencies. Elsewhere, moves were slight as trading slows down into the holiday season. The absence of fresh news, the Chinese yuan slipped back to the weaker side of 7 per dollar. It's a slightly more generalized form of dollar. I don't think this is news or fundamentally driven. Flo said Ray Trill. The greenback was a little weaker on the euro at 11.31. Kiwi was knocked by an unexpectedly steep drop in dairy prices. And the Aussie dollar held near its lowest in a week ahead of a crucial employment data due on Thursday. A disappointment could bring forward another rate cut, especially after the RBA foreshadowed possible easing in December meeting minutes released on Tuesday. The RBA minutes struck a more dovish tone than the statement on the day, specifically citing the February meeting as a suitable time to release the outlook, Westpac analyst said in a note. With that, we're going to move into the analysis. As I said, it's very, very quiet trading, frustratingly quiet trading moment. Well, let's get on with the euro dollar. Well, there's been no change here in the euro whatsoever. We're looking at 1180 on the upside for bias chart resistance intraday, but the key is we need to get a daily close above 1154, and we've not been able to do that. We can see a line here at 1150, but it's 1154 that we need to get above on a daily close to generate some further upside move. We've actually tagged it today as far as intra resistance, but our intraday resistance is 1180. And our support really doesn't come in until 1105. Although we're holding rather steady, but potentially we can slide back. The critical area is going to be 1105, especially on a closing basis, 1154 on a closing basis, but intraday range is 1180. So no changes here on the euro. Let's go and move this now to the cable. Well, after put in this gravestone doja here on Monday after we made another trek up in here. The market has pared back, but we're trading relatively quiet. I mean, we pared back a decent amount yesterday, and we're just trading in a very quiet session today. We do have some UK data at the bottom of the hour, CPI, PPI data, but we are just absolutely quiet trading here. Support on the downside, we're looking here right there at 30.50. So we're going to push this here. And on the upside, well, we do see here 32.06, but actually resistance is going to come in right there, which is going to be, we can actually look right there. Coming across 31.55. We'll go on and draw this in. Going to call 31.56. That'll be just above this 23% anyway. And let's go move into the Aussie dollar. Well, we do have employment data coming up in this next session, depending on what neck of the woods you're in. If you're here in the States, it's going to be tonight. Obviously, for most of the globe, it rolls into the next day. But trading in a relatively quiet session, potentially there's a chance that the RBA will be looking at a cut for February. And employment data, as stated, Philip Lowe was saying, we need to get down to about 4.5% to generate any kind of inflation. So that might already give you a hint that if it comes in a weaker number, they're looking to go in and cut anyway. So trading very, very tight ranges. On the upside, I'd have to go right there, which is going to be 68, 62 for right now. Obviously, we're going to have to allow for some volatility with the employment report, so we're actually going to kick it up to here, to this level, which is going to be 68.76 on the upside. It's not too far away, but 68.76. And on the downside, well, we do have 68.31. That being said, if we get a weaker number, potentially they're looking for that. How far can we push? We have to encompass that spate of volatility that can come about with the employment report. So we'll actually be looking down here for 68.08. Let's go and move on to the Kiwi. So HSBC is looking for UK data both to drop in CPI and PPI, which is coming at the bottom of the hour. let's see here. Looking at the Kiwi, did get weaker dairy prices, and we've already had a pretty good solid run over the last nearly 3 weeks. So resistance support is going to come in here at 65.44. Yeah, 65.35. Tell you what, we're going to go and keep this only to allow in case we do see the Aussie come up quite a bit. Uh, and that's not that far away, 30 pips, although we pared back, but that's probably a decent area for them to pick it up. On the upside is going to remain at 66.06. With that, let's go move into the dollar CAD. Well, we're still trading in a rather tight range after we saw a little bit of movement here. We try to challenge back up to 32.05 on Friday. Saw a dip back here on Monday, only to recover back, but fall way short of that same level. And then we traded yesterday, rather quiet range, and we're doing that even quieter range today. On the upside, we're gonna have to look at these bigger figures. Well, it's not that big, which is going to be back up here at 32.05. And on the downside, we're going to be looking at 31.33. So no changes here in the dollar CAD. Once again, the upside 32.05 here. On the downside, just a little bit lower than this 31.36. But trading, like I said, very tight ranges. Trading has become rather quiet, to say the least, even in the indices as we come into the Christmas holidays. With that, we'll move into the peso. This has continued to remain on the very, very weak side. I thought we would have seen some support and a bounce from around 1902. We did see it. I mean, we made it up to 1908, but I thought we would have stabilized and then tried to work ourselves a little bit higher. But when we made it up to 1908, all we did was try to roll back and broke even further to 1892. And from there, I thought we'd see a better bounce, but we've just consolidated, sitting at these lows. This might have, well, a couple of factors, not only from where we are in indices here at all-time highs, but also at this point we're just stuck here at as we move into the holidays, volatility remains low. So we've moved into these new, I don't know if we call them ranges or new levels, and then these markets across the board just seem to have quieted down, and that's where we are right now. So we're going to stay with this 1892 on the downside here, and on the upside for right now is going to be 1898. Let's go move into the dollar yen. Well, the dollar yen did close below that 954. I thought we might have seen some further follow through, but I can see where that might be a little bit difficult with equities where they are right now. But we slid back below 954 on a closing basis, and the doors open for us to come back down to 927. Hesitant to keep it this close because if we do see a rollover in equities, so with the peso, we're going to go and move support back down to 908. Seems like a ways away, but if we do slip, I think that's where we'll go to. And on the upside, it's going to be 977. Still remains bullish because we are above the pivot. And with that, we'll move to the cash dollar index. So no changes here with the cash dollar index, as this 97.38 still is resistance. Well, you can see here we did make it up to just about the 38. Looks like we tapped off at about 36. But 38 is the resistance, which is confluencing not only with this trend line, but this level here. And on the downside, 97.02. And as I mentioned, we are just dead in the water as we come into the holiday. We do have UK data at the bottom of the hour. So they are looking for data coming down 1.1 to 1.4, which would be the weakest in 3 years, they're saying across the squawk. So CPI and PPI I do up next. We're going to move into the cross rates so that we can see a little bit broader view. We've got the guppy, the sterling odd, and then the cable right here. So what we'll do is we'll bring in the data here. Let's go in and take a little bit closer look here with the guppy and starting odd. Kind of gives us a little bit of a generalization where we are right now, or a little bit of perspective. There we go. And then with the cable, all three of these on a 2-hour chart basis. And here's what we're looking at. With core CPI, Reuters poll looking for 0.2, which might be a little bit on the rich side. They're saying that HSBC is looking for weaker numbers across the board. And also with PPI data coming out, both these key numbers coming out at the bottom of the hour and the next minute or so. So let's see how we go. But you can see here, obviously, with the guppy, the sterling odd, and the cable, all trading in very quiet sessions. Sterling odd potentially will give us our best reaction here for volatility, especially as we come into the Aussie jobs report due out in less than 10 seconds. Came in line, 0.22 tenths on the core. Now it's month over month with a year over year, 1.7 came in line also with the Reuters poll. We are not seeing any movement really whatsoever. Look at that. Wow, no movement, really, no movement at all on this. So let's go move into the cross rate analysis. And we'll move into the Kiwi yen. Well, we have gone and seen the Kiwi yen pair back here lower and tag the trend line, which we're going to actually use that trend line as support, which is going to be 71.70. We had 71.65, so we'll keep that, but that trend line comes at 71.70. We'll keep the 71.65. On the upside, we had 72.37. We're actually going to move it right there. You see there? It's going to be 72.15. Call it 72.14. That's going to be our resistance. 72.14. And let's go move on to the euro yen. A little bit of a dip back here in the yen. We had 21.80, and that comes in right there at 21.72, which is almost where they came. So we're going to move this for 21.72. And I'll show that to you. You see right there, this high, right there? There. You see there? And we almost made it there. So that's actually our support, which is going to be 21.72. And on the upside, just this nick here on this high right there, which comes in at 22.24. 22.24. Let's go move into the euro on. This market, we made that track down to 16.95, and then we held. We've been up and down. Look at this, down, up, down, up, down, 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 up, and we tried to stretch it up in here, and we did get above here. What we need to do is we need to close above this area, which is 62, right there. 60. Let's call it 62.95. Oh, that's what we already had. 72. That's what we need to get above. Support on the downside. We're at 61.78, which has held this pair. Let's go move into a 2-hour to get a little better, closer look. It's going to be right there. Let's call it 62. Let's just call it 62.35. Actually comes in here to make or break right there. So let's go with, especially with this Aussie data coming out. So let's go right there with 62.30. And we'll move into the Euro Kiwi. Well, we've been building a little bit of a base after just the bottom falling out. Finally building a little bit of a base. We're trying to work a little bit higher. Resistance, I think that actually was resistance right there at 69.68. We actually had listed 69.66. If we can push, that's going to be key for it to close above that 69.66. That's going to be a resistance right now. 69.94, 69.94. But it's important for them to close above 69.66. But resistance now 69.94 still remains bearish. And on the downside, right there, if we do slip back, needs to hold that area. 68, 62. If not, we could take another leg down, but we shall see. Let's go move into the RCN. We're backsliding here. How much? Well, we're just going to go straight up with the levels here, which is 74, 73. There's going to be support, and on the upside, well, with the Aussie data, it's going to be right up in here. 75, 62, 74, 73. And let's go and move into the guppy. We've come in close to this 23%, and potentially we can slide a little bit lower right there. You can see that right in there, and that would come in 42.56 as we start to slide back. And on the upside, immediate is 44.11. Where have we given up quite a bit? And let's go move into the stirring node. We're just holding right here at this trend line. It's going to be right there. And we just about tagged it there too. Right there. Let's call it 90.95. 90.95. Let's see. Okay. Yeah, Rick said he lost sound. I just want to make sure. Okay, so we're right there at 90. It's going to be 90.95. And on the upside, let's go into the 2-hour chart. Right there. If we can get a bounce, that's going to be a heck of an area right there to either initiate shorts if you're short, exit some longs. It's going to be right there at 92.15. We're going to draw that in. Right there. Especially when we're looking with the Aussie data today, that's going to be a critical area to look at. 92.15. Above that would be 92.32, but this is going to be a very good area right there. 92.15. Let me get rid of that. Sorry. Actually, you can actually even move that a little bit up here like that. Right there. That's the zone you'd be looking at. But really, it's key. This is the area here. Let's move this to here. Especially with the Aussie data due out tonight. That's what we're looking at on the rebound. Very key, 92.15, and then on up to 92.73. So this area right in here, you can see some good volume trading here too. So if we were to get a rally in here, this is, and potentially we would see that because they're expecting weaker Aussie data, we could see the same climb, but looking at, because we're potentially looking for a rate cut in February, and Philip Lowe was saying they really need to see this unemployment rate drop to about 4.5% in order for them to generate some inflation. So if it comes in weaker, he's saying, hey, look, it didn't even get anywhere close to our number, so which would suggest a cut coming, which would send this thing right up here. Now, what would happen in all likelihood if the Aussie is going to potentially get a rate cut priced in much sooner than later? It's fully priced in for May. I think it said 50-50 or less than 50-50 for February. It would bounce this thing up, and it would probably sit up in here for a while. So initially, you'd be looking at this area and then the secondary level right here. So actually, with the Aussie potentially weakening, you probably could see a return trip back up into this area right in here. Right there. That's what you'd be looking at. And if we were to throw a fib on that, if the sterling doesn't weaken, I kind of doubt it will with this Aussie data coming up. So you'd be looking at a 38% at 92.65 and a 50% at 93.15. So that is some key. This can be the key chart to look at coming into tonight. Excuse me. So let's go with 92.15, 92.65. Doesn't mean we can't get beyond that, because once again, the Aussie will probably stay weaker. One of the things you have to consider is that if this Aussie data comes in on the weak side, it's going to solidify, or at least the thought would be, it will solidify a weakening odd. So it's not, one of the things you have to be a little bit careful with, it probably won't be, even though the pound's been weaker, it's probably not going to be one of these where you come up here and immediately go down. Eventually, though, with they're saying about the Brexit woes coming back, blah, blah, blah. We've already had a pretty pretty good run here. So what could happen is we could make a move back up into here, maybe stretch it as high as this 93.63. If the odd comes in weaker and it keeps on pushing higher, this 61% eventually could be where they would stretch, let's say, into next week. And then if they get that far, and then we start weakening, and not so much the odd weakening as much as the sterling starts to weaken. So initially for today, yeah, 92.15, but if the Aussie gets a foothold on some weakening data, the thought that, hey, they're going to be cutting, then we can certainly push higher. And it's up in here where there's going to be, let's put it like this. These two key areas. If we get bad Aussie data, we're going to trek around in this area here. And then if the sterling starts to weaken, then it's from here that we can start. So really, I would be looking at, depending on how bad the data looks, your initial reaction. We've had so much volatile movement. I'm a little bit concerned that that might be a little bit too close at 92.15. If we do get bad Aussie data, we probably are looking, and considering how much we've given back, we probably are looking here closer, much towards 92.65. Let's go in and mark that off. And we're going to put this here. There you go. That's at 38%. And I think we could, if the Aussie data does come in on the weak side, they could easily push this in, especially if it gets a foothold with the thought that they're going to be cutting it potentially in February. They may make it up in here, and then they kind of sit here, dilly-dally around, make it up in here a little bit stronger, and then it's all about the sterling after that. And then maybe we eventually start to slide back. You have to keep an eye on the other sterling pairs, but potentially this thing could easily make it up in here to this 65. That's going to be our resistance. That covers it here. And we did take a look at the beginning of the show, the other markets, and we'll take a quick look, but honestly, there's nothing really happening here. Look at S&Ps. I mean, this is the tightest range I've seen in quite some time. It's just pretty pathetic, so we're just not seeing any real movement here. 10-year notes. I like looking at the bonds, but I have to admit that the liquidity in the 10-year is far vast. And most people look at the 10-year, so I'm starting just to focus on this. And once again, I caught a little bit in the spoos yesterday, but I would prefer to trade using spoos, but trade these bonds and notes. They react pretty well. Sometimes, although yesterday wasn't as good, I didn't do anything with it, but on Friday we had some fantastic movements in the bonds, as if you were trading the S&P. So S&P started to rally. You saw the bonds come up very nicely and rebound very greatly, but we didn't see much of a reaction on Monday. I mean, on Tuesday, was kind of like somewhat diverging. Gold is interesting. We've held up relatively well. Still keeping the bid here. And crude oil, a bit of a surprise here, although we're looking on the daily chart. Looking here a little bit closer on a 15-minute chart, we have started to pull back, but I was surprised to see it make it all the way back to 61. That's all we have, but thanks for joining us here on the European Crossover webinar. We'll see you in the daily wrap-up.